What's going on, everybody? Welcome back to the channel. And in today's video, we're going to be talking about a trading strategy using moving averages that you can use to make massive profits. But before we get into it, make sure to hit that subscribe button, smash the like, and hit that notification bell so you don't miss any of these great tutorials or urgent market updates that we will be uploading to the channel. So if you guys remember in the last video, we talked about moving averages, what they are, how they're calculated, and how they act with price action, right? If you're below the moving average, typically it acts as resistance, and when you're above the moving average, it acts as support. So without further ado, let's jump into the charts. I'm going to show you guys how to use the moving average to find great entry points for long and short positions, where to set your take profit, where to set your stop loss, and what you should be looking for when you're coming up to that moving average to let you know if you should be taking that trade or if price is just going to break through the moving average. Let's get into it. So here we are on our polka dot 4-hour chart. And one thing you want to keep in mind when using this strategy is that moving averages typically work best in trending markets, right? So it might not be the best strategy if price is just moving sideways or you're just in a ranging market, right? So you could see here on the polka dot 4-hour chart, we are in a downtrend, right? We are respecting this line of resistance, right? For the most part, you bounced here, you bounced here, you bounced here, you bounced here, right? So you're respecting this level as resistance. So the first thing you're going to want to do is you're going to want to come to your indicators and you're going to want to go ahead and type in moving average, right? And you see right here, just the regular moving average. You're going to click that and then you'll see it pop up right here. And you're going to want to double click on this and go to inputs. And today we're going to be using the 50 period moving average, right? And then I'm just going to go to style. I'm going to click here and I'm going to make the line a little thicker so it's easier to see. And as you can see, we right here, we did break below the moving average, tested it as resistance, and then started coming down, right? And then we didn't quite come up right here, but we're still below it, respecting the resistance. We respected it here, 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 and here, right? So if you do see that you respect, resistance once, twice, and then you had it respected again up here. So that's 3 areas where you respected this moving average. So let's say you're waiting for price to come up. And in this first example, we're going to be looking for a short position, right? We're looking for price to be moving down. So you can see here that when you come up and test the moving average, a lot of times what you're going to want to be looking for, rather than just waiting for your price to be coming up to the moving average, the way we're going to add confirmation and confidence to entering these trades is we're going to be looking for candlestick patterns, right? So you can see here, we came up and tested the moving average, and then we printed a red doji candle, right? Where you have a wick on the top and a wick on the bottom, right? This is showing that there's indecision in the market, right? It doesn't know if it wants to go up or down. Now, a lot of people confuse these when they print as a red candle. A lot of people think that when they see these candles, it means that the trend is automatically going to reverse to the downside. And granted, that is what happened here. That is not always the case 100% of the time. So what you can do to confirm these candles is you can look at the next candle that prints next to it, right? And when you get the body of the second candle to close below this indecision candle, that's where you can enter your trade, right? So if you did enter your trade right here at the close of this body, you could have rode this down for about 14% profit. I know, you know what I'm going to say. I'm not going to say it. Actually, you know what? I'll say it. Throw some 10x leverage on it. And that makes that 130% move, or almost 140% move. So this is very, very powerful. Now, you don't always only have to look for these doji candles. Another candlestick pattern you can look for is a bearish engulfing pattern, right? And that is where you have a red candle completely engulfing a green candle, right? So you can see here with bearish engulfing candles, you have this red candle that completely swallows up this green candle. This indicates that price could be on the verge of a downtrend. So this is just another candlestick pattern that you can look for while you're approaching the moving average, right? Another thing you can look for is you can look for shooting star candles. Now, in the case of a shooting star candle, you're going to have the body of your candle, right? And then you're going to have a long wick on the top with no wick on the bottom, right? So this shows that the bulls tried to push the price all the way up, but then the bears slammed the price right back down. And that is called a shooting star candle. And it is a bearish reversal candle, right? So if you were to have one of these printing right as you're approaching the moving average, this could also indicate that the trend is about to reverse. So you can look for these doji candles and wait for the second candle to confirm close below it. You can look for bearish engulfing candles, or you could look for shooting star candles, right? There's a lot of different candlestick patterns, and I think we'll be making a video about candlestick patterns in the future. But if you did a quick Google search on different candlestick patterns, you could find an easy diagram of all different bullish candlestick patterns and bearish candlestick patterns, right? So you're going to be looking for candlestick patterns to confirm your entry here. So as you can see, you would have gotten a nice move here if you entered there. And I'm going to be showing you guys where to set your take profits and your stop losses in just a second. But first, let's go ahead and move over here to the next time that we tested this moving average, right? So you can see price came up, right? And we came above the moving average, and then we came right back down and tested the moving average as resistance. So you can wait for price to come back down, and on the retest right here, you can see that we printed another indecision candle. So I would suggest waiting for the next red candle to print to avoid getting faked out with that indecision candle, and wait for it to close below the indecision candle right here. So you can see we did close below it. And if you entered there, you could have hopped on for a ride to about 21%, or, if you held it a little longer, you could have came down for about 28%. Now that's 28% is 280% profit with 10x leverage, right? So very, very, very powerful move. And again, you can confirm that with the second red candle printing after that indecision candle and closing below, right? Now let's take a look at an example for a long position, right? So you can see here we are in an uptrend with the moving average acting as support. We respected it here, we respected it here, we respected it here, and so on, right? So for these examples, you can see that we did print an indecision candle right here. So you have that wick on the top and a wick on the bottom. Just to confirm that you are going to have that bounce, you can wait for this next green candle to close above this indecision candle. And you can see it actually did. So if you entered here, you could have rode this one up for about 27% profit, or you could have held it for 31% profit, right? That's 310% profit with 10x leverage. So very, very powerful, right? But very important that you're seeing some sort of bullish candlestick pattern to confirm that it is a good entry, so you don't wind up getting faked out and you just crash through the moving average. And then right here, you can see again, didn't quite come down to touch that moving average, but you do have this body in the middle of this candle with a wick on the top and a wick on the bottom. Now it does look like that top wick is a little longer. So if we come on over here, you can see that we did break below the moving average, right? And then we printed an indecision candle right here. And then you could wait for that second green candle to pop up, right? And close above. You want the body to close above that indecision candle, and you can enter there and look at that 4.3%, or you could hold on to it for about 7.2% or 72% with 10x leverage. You're going to want to be looking for these candlestick patterns to add confidence to your trades. And this one, obviously, you are entering after the candle closes above the moving average, right? You wouldn't want to enter this if you see this candle closing below the moving average, right? Showing that you could be flipping the moving average into resistance. Now, let's talk about where to set your stop losses and where to set your take profits. So for take profits, I recommend taking profits a little bit before you come up to that next swing high. So if you did set your take profit before this previous swing high right here, just a little bit before, right? You would have gotten a 6.4% move or 64% profit with 10x leverage. The reason that you want to take profits before this swing high and not just at the swing high is because you're likely to see a reaction off of this, right? Obviously, in this example, you just shot right through. So, it never plays out 100% of the time, but you want to be safe. This is a level of resistance, and you could be seeing a little bit of a rejection when you get to that level. So I just recommend taking your profits a little bit below that level, right? Now, what about about stop losses. Now, when using moving averages, you could place your stop loss below the moving average, right? So for this particular trade, you could set it right below the moving average, right? This is going to be dependent on your risk tolerance, right? What a lot of traders will do is they'll set their stop loss right below the moving average, and then the breathing room that you give it can be up to you. I personally, I would set mine about, right here, because we do have a swing low right here where we could possibly see some support, right? And if we draw a line, you can see it was support here, resistance here, right? So there's a good chance that if we come back down, we could see support at this level. So you're essentially placing your stop loss right below that support. That's kind of the idea of placing your stop losses below swing lows. It's because when you get to that level, typically that area is a level of value, right? So this way, if you come down, you will have possibly be able to bounce off of, if you lose the moving average a little bit, you might get saved by this little line of support. And then if you come down, then you'll just get stopped out. And then as price comes up, you can continue to move your stop loss above, right? So let's say price action is right here. You can keep your stop loss below the moving average, and then just as price comes up, you can keep moving your stop loss into profit. So basically for stop losses, it's kind of the same thing as what we previously talked about in past videos that we've done. You want to place your stop loss below previous swing lows, and you just want to make sure you're below that moving average, right? So because you might find support on the moving average. And then, if you are at a previous swing low like this right here, there is a chance that you can see a little bounce from there, right? And then if you lose that level, that means you lost the moving average and then you lost this level of support. It's probably a good time to get out of the trade. So before we wrap up the video, let's just go back and see if we can find another example of a long entry, right? And you can see price is moving up in an uptrend here, right? You got to remember that moving averages work best in trending markets. So we are in an uptrend here. We didn't quite come down, right? We tested it right here. And then, we touched here, we touched here, we touched here, here. So, you got one touch, two touch, three touches. So maybe you look for an entry on, after you touch it 3 times, you want to wait for price to come back down and then enter a long position. So whether it's this candle or, you waited and you got this second touch right here, we did print some of these indecision candles. These do pop up a lot, right? When using this strategy, you will see that these come up often. So you got a red one and a green one, both very similar in size. So you would just kind of wait these out, right? Wait this one out. You printed another one, wait it out. And then, a lot of people would be like, oh, we had a red one. Now we got a green doji. Like, oh, let's jump in for a long. But what I would do to, just be a little more conservative, be a little safer, is wait for a green candle to print after the indecision candle and close above it, right? So you can see this body closed above this candle right here. And then you can enter your trade right there. And you could have rode this up for about 19% profit or 190%. So not too shabby. And then as far as take profits, you could take profits right before you come up to this level right here, right? So let's just go ahead and mark this with a horizontal line. So I would recommend maybe, and you did see somewhat of a reaction here. We did push through, but you did see a little bit of hesitation when you came up to this level, which is why I recommend taking profits a little before the level, right? So let's say you got in here and then you set your first take profit right here for about 6% or 62% with 10x leverage. And then, you could take out 50% of your position and let the rest ride and then catch that little extra 12% profit, right? Or 120% profit. So you can see that this is a very powerful strategy. Again, we are on the 4-hour. I typically like to use the 4-hour because, you have enough time to get into the trade, right? So, we hung out down here for quite some time. So you don't have to sit there and stare at the charts as consistently as you would have to on a smaller time frame. I typically use this on the 4-hour for the most part. So as you guys can see, very powerful strategy. So guys, I think that's all I got for this video, right? We did put out that how to use moving averages video, just a couple of days ago. So I wanted to show you guys a moving average trading strategy so you could take that information and apply it to an actual trading strategy and get into some really profitable trades. So just to recap really quick, You want to make sure that you're in a trending market, in an uptrend or a downtrend, and you're going to want to wait for price action to approach that moving average, whether it's acting as resistance or support. And you're going to want to use those candlestick patterns, whether it's a shooting star, right, with the long wick on top and the flat body on the bottom, right? That's a bearish reversal pattern. Whether it's a bearish engulfing or a bullish engulfing candle, right? Or you could have an indecision candle, right? Like a doji candle. So there's tons of different candlestick patterns. I think we'll come out with a video in the near future on candlestick patterns, but you could do a quick Google search and find a nice, easy diagram to read that will show you all the different bullish and bearish candlestick patterns. So you're gonna wanna be looking for those candlestick patterns as confirmation to enter the trade. You don't just wanna enter when you're blindly coming down to that moving average, right? Because if you're looking for a long and you come down to that moving average acting as support, and then you get a bearish engulfing candle, or you get some other type of bearish candlestick pattern, you could just smash right through that moving average, and you'll wind up getting stopped out or liquidated or whatever it is. So those candlestick patterns as confirmations are absolutely key. And then for take profits and stop losses, your take profits you want to take right before that previous swing high, right? Reason being that there's a good chance that you're going to see some resistance at that previous swing high. And you can test this by putting a horizontal line on that swing high and looking back to see if that line has been respected as support and resistance in the past. And if it did, then that could add confirmation that you will probably see at least some sort of a bounce off that level. So you're going to want to take profits right before that, right? You want to be a little conservative. And then for stop losses, you're going to want to set them below the moving average, below the previous swing lows, right? Same idea behind that. If you drew a line on the previous swing low and see that price has respected that level of support or resistance in the past, there's a chance that you will probably get a bounce off that level. So you have the moving average acting as support, and then that previous swing low will act as a second level of support. And if you break both of those, you can put your stop loss right below that level of support. And if price gets below that, then it's probably a good time to get out of the trade. So I hope that helps you guys out. Now go hit the charts, throw on a 50-period moving average, get on the 4-hour, and look for some good entries. But make sure you're in a trending market, and make sure you're using those candlestick patterns to confirm your entries. With that being said, I think that's all I got for this video. I'll see you in the next one. Frank Candles out.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah, maxed out, put